Well, hello everyone. Welcome to Trading a Smaller Account. My name is Barbara Armstrong. I'm a coach and senior manager with Schwab. Today, in our Trading a Smaller Account, we are going to look at some trades that have hit targets, some trades that have hit exits. So we're going to do a little bit of trade management or trade review. And then we're going to spend some time looking at new opportunities. And we're going to look at, because I get asked all the time, how do you come up with the examples you choose? So I thought that there would be merit in looking at some of the ones that we, might have considered and said, yeah, no. So we're going to do a little bit of that too. I've got James Boyd with us in the chat. I don't know if you guys know this, but he has a vicious guard dog named Max. Max often hangs out with him as well. And Max is about, 10, 12 pounds of fluff. But yes, anyway, we've got James and Max with us in the chat. He's, James is a friend and a fellow coach. And so if you've got any questions, don't hesitate to ask, as we go along. In between James and I, hopefully we will have answers for you. Now, if you aren't following us on X, my question to you is why not? It's another free resource, and James and I are posting on the daily. So please feel free to follow us at Barb Armstrong CS and at James Boyd CS. Keep in mind, this is a smaller account class and a very active trading class. So I'd say this is more of an intermediate level class than a beginner level. And we trade a lot of options. And so know that options do carry a high level of risk and aren't suitable for all investors. You also have to apply for option trading privileges. And not all will qualify. We use the Paper Money software application on the Thinkorswim desktop platform, and it is a brilliant place to learn, become familiar with not only the platform and how to place trades and exit trades, but also a great place to practice and become familiar with trading strategies before you consider trading it in a live account. One important difference between a live account and Paper Money is that short options will never be assigned early. And in both accounts, just because you put in a stop loss doesn't guarantee that you're going to get out at the price requested. And we have an example of that today as well. So I've got one quick announcement. We're going to do a very quick market overview because this morning, and it wasn't archived, but several mornings a week, Kevin Horner does a class at the Market Open called Trader Talks and does a very in-depth overview of what's going on in the markets. The one yesterday was archived, so you can go back and look at that. But James and Kevin met this morning at the Market Open, and I know that there were many of you there. So our market overview will be very brief. We're going to manage some existing trades because we've got a lot of trade management and review to do, and then place some new example trades, and we'll go back and forth between the two. And we're going to look at both bullish and bearish opportunities today. Okay. And I want to thank all of you who are here and bringing the class to life. So to, Bill and Will and Coco and Final Approach and Ron and Steve and Frank and Dom and AP 514 and, Josh and the rest of the gang. Thank you all for being here. BJ wins the prize for being the first one into the chat this morning, but it really helps bring energy to this class, and I appreciate it. Now, when you speak about energy, right now there are somewhere between 600 and 800 people gathered in a room in Orlando to do a 2-day workshop. After that event, the next one up will be a market drive in November. And so if you've never been to a market drive, we go from kind of globally what's happening down to looking at individual stocks, and we'll have the coffee on, we'll provide breakfast, we'll provide lunch, and a great reception at the end of the day. So we'll feed both your mind and body. I will be at these 3 events, the last 3 events of the year. So be there, be square. It's free to register, but these things do get booked out, and you don't want to miss being able to attend. And they're free to attend. So and free to register. So don't miss out. So then we've got a 2-day workshop in Houston, and then an advanced options workshop to close out the year, the weekend before Christmas. Yeah. Okay, so if you've never been to one of those, I encourage you to check it out. And if you're saying I can't do anything in the fourth quarter of this year, what are you doing at the beginning of next year? You can go and have a look. Go to schwab.com//coaching and go to in-person events. Alrighty. So let's have a look. So market down a wee bit. We're seeing, a lot of red on the screen today. So when we look at the S&P 500, but it's more pink than dark red. I mean, the darker the color, the more the stock is down, or the more bearish it is. So we have like Microchip Technologies down 5.5%, NVIDIA down 1.7. Okay. And we're seeing that on the NASDAQ as well. We've got more red on the screen for sure than green. But you know what? This is a one-day pullback. It's still above the 30-day moving average, certainly above the 100. Does it look like there has been a change in the trend? To quote John Panette, I say nay, nay. Same with the NASDAQ. In fact, it hit a new intraday high today. Isn't that just kind of rubbing salt in the wound? And then turned around and it's down 2% at this time, like 1.94% over yesterday's close. When we look at the Dow, similar picture. This one, as of this moment is breaching the 30-day moving average. And then if we come and look at the small caps, it's come down to the 30-day moving average. And if you're wondering about the Russell 2000, I did a video that I posted on X, and it's just like 2.5 minutes, a bunch of interesting facts. Like, I thought the Russell was the biggest of the small boys that are part of the Russell 3000. I was wrong about that. It's actually the smallest of the small boys. So it's the smallest market cap, the smallest 2,000 stocks that are part of the Russell 3000. And they comprise about, I don't know, it's under 10%, about 7% of the market cap of the Russell 3000 is what the Russell 2000 is made of. But if you didn't see that, you may want to go back and have a look. So, all of those are down. And then, if I had to guess, I'd guess the VIX is up. And what do you know? It's up 26% today. Yeah, 26%. So that's a pretty big move to the upside. So what's happening in our account? Because it feels like forever since we've been together now that I'm not teaching trading price patterns on Wednesdays. So let's come to the monitor tab. So we can see that we are out of a few positions here. So 2 on Devon, we did 2 calls. We're out of a call spread on Cisco and a put spread on ANET. And then we hit a stop, which was part of 2 trades. And if you're wondering when you put notes in where you see them, if you click on this, we were going to compare that to our long call with a 1 ATR target. So let's come in and look at our spread trades first, and then we'll go and we'll look at some new opportunities, and then we'll come back and we'll look at these other positions. So if we come over to our account statement and we'll look at the one in green, so ANET, and you see that today we hit our exit because it's at 33 cents. On the 10th, we had put in 2 trades. So, and we were just going to compare and contrast. Now, this one that we put in with the shorter time frame hit the exit the same day. So I'm not going to review that one because it's a bit of an anomaly. So this may have been a bit of a paper money hit, so to speak. But the other trade that we exited today, and just let me bring up my drawing tools. Okay. My system is going a little slow. So we put this trade on for $1.70 and we got out for 33 cents. And this is the one expiring next Friday. So if we take a look at our goal on these is typically to capture 80% of the max gain. And so we probably put if we looked at order history, our exit was probably at 34 cents. And we got out for 33 just after the market opened today. So how much did we make? And we only did one of these. And why is that? Well, because our risk on this was $1.70. If we take $5 minus the $1.70, we were risking $330. And and what did we end up making on this? Our max gain would have been 170. So what we ended up making on this, if I take 170 minus 33, that gives me 137. So I made 137. We risked 330. And so what is our return on risk? Our return on risk was 41%. And for a short put vertical, many would consider that to be a pretty handsome return. And so, there's a base hit. How much did we make? We made $137. And so that one kind of went according to plan. The only thing that didn't go according to plan, which was because of this anomaly where we're going to compare and contrast these two different expiration dates, we ended up not really doing that on this one. And then if you wanted to see hey, what was my target? Our target was to get out at 34 cents on this if we look at order history. Okay. Okay, now the other one we wanted to look at was Cisco. So on Cisco, again, I've been doing a lot of these pairs of trades. And so on August 27th, we placed two vertical trades and these were both long call verticals. The one expiring in September was a $2 wide spread. We got in for 97 cents. And that one didn't go so well. So if we come and we look at our chart, we ended up out of that on September 8th. So we ended up out of that on the 8th. And why did we do that? So let's look at our date on this. Here's the 8th. And this one did not go according to plan, but we put the trade on here and expecting that it was going to go up, and it didn't. And so we must have been down 50%, or we would not have closed it out. But because we had this shorter time frame, we had less time to recover. And so we took a hit on this one. And in fact, when we look at this one, when we got out, we placed the trade for 97 and we bought it back for 34. And so how much did we lose on this one? Let me bring my drawing tool up again. So on this one, it was 97. We bought it back for 34. And so we were out by 63. Now, how much could we have lost? We could have lost this entire amount because it was a long call vertical. We were paying 97 to get in. So we ended up losing 63, $63 a contract, times 3, because we did 3 contracts. And so we were down by $189. Which was a 64% loss. So we lost more than half. And our goal was to get out at 50. But I like to manage these trades in class. And so that's where we ended up. Now, on the second one, and again, we placed these trades the same day. and the spread was similar. This one was $2.50. We paid $1.29 to get in. We got out of it today. It hit our target at $2. And so on this one, we were up by 71 cents $71 a contract. And on this one, we did 2. Now, if we were doing more apples to apples, we did 2 because we wanted to risk about 500 in total, which is what we did. So on this one, we were up $142. And, which turned out to be about 55% up. And so, when you look at these, sometimes the temptation is to go shorter if you're confident in the direction. What's the downside? Well, we're seeing it here in spades, is that, we have less time to recover. By giving ourselves more time and going out to October, it gave us time to recover, and that one worked out better. Now, would I say that this trade was successful and this one was not? Well, the thing that was successful about this trade is that we honored our trading plan, which was to exit when we were down 50% or more. So that was good. The second thing is that we position sized appropriately in the beginning so that we weren't risking blowing up our account by losing more than we could afford to lose. So not all trades will end up being profitable. And I'm not trying to make excuses, but this is just the reality. And one of the benefits that we've seen when we have a shorter time frame is that if this had moved up nicely, we likely would have ended up out of this one first with a profit and saying like, oh, these shorter term time frames are the bomb.com. So John is saying no explanation as to why you place these trades. Well, we were placing these trades because we were bullish on Cisco and we wanted to compare how it might work out if we looked at 2 different time frames, a closer expiration and one that was further out. If you want to see the entire conversation around it, go back to this class on the 27th. So, and to see previous classes, you just go pull up the playlist and I'll show you how to access that. Okay. So somebody's asking why I'm not going to be in Orlando. And the reason I'm not in Orlando is because I am going home to my hometown for Canadian Thanksgiving. So that's why I'm not in Orlando. Otherwise, I would have been there in spades and would have looked forward to seeing you all. So there we go. So if you haven't subscribed, there's a button in the bottom right corner. It's free to subscribe. It's another, access to resources. And you just want to scroll down and look for trading a smaller account, and if you want to see also, for the types of trades we're doing today, in the mini session series, and I've been doing a bunch on candlestick patterns. You'll see 2 new ones, number 9 and 10 will be added next week. But if you come down here in blue, there's an example trading plan for short put verticals, for long call verticals. There's also one for long calls with one ATR target, which you can flip and reverse when today we're going to do a long put with a 1 ATR target. Yeah. But anyway, that's that resource. That's called the Trade Management Mini Session Series. But if you keep scrolling down, you'll see that trading a smaller account. Here we go. And so if you go back to the 27th of August, you'll be able to pull that up. Okay. So that's how you access that. Yeah, usually I do explain my rationale or lack thereof. So let's come and look at a couple of things. So Intuit. Oops. Are you into it? So when we look at this, with Intuit, we've got something that has been starting to fall, but today it looks like it may be finding some footing. And if we're looking for entering a trade when we have a close below the low of the high day, that would have been on this day. You know, the other thing that we may want to look at, if we just kind of step back a little bit on this one, is that this is also approaching a potential support level, because it's kind of been down around this neighborhood a few times, hasn't it? And so you may not want to enter, you know, a bearish trade when it's approaching a support level. So there's one strike. And if you're saying, well, maybe we should enter a bullish trade, this is a potential harami. Yeah, but do you really want to place a bullish trade like a short put vertical on a stock that's been falling, where if that trend were to continue, you know, it might continue falling? And so for that reason, we're going to pass on that one. Okay. And that's the thought process or the reason behind it. How about looking at CTSH? Okay, so CTSH, you know, if we're looking at this is a stock that's down, Cognizant Technology. It is down almost 14% year to date. So it's been kind of rolling down the hill for a while, right? Like it's gone from a high of 90 back here in February down to a recent low of 65, but it has been downtrending. Now, if we had talked tomorrow or talked yesterday and looked at this, we might have said, well, hey, if it goes below, you know, today, this day's, you know, we'd be looking for a close below the low of the high day, which was yesterday. But, you know, when we look at this, it has blown past that. We're down 3.5%, but what are we approaching? Another potential support level. But it's kind of, it went all the way down there in one fell swoop. And so, you know, if we wanted to be bearish on this, we could be, but if it's approaching the support level, what might we want to do? We might want to say, hey, you know what? I'm going to just wait for a hot minute and see if this support level holds or not. And so for that reason, I'm going to look at this and say, I see a bearish opportunity, but no cigar. And isn't it interesting how when you draw the line, all of a sudden your eye sees that support level, where when I first looked at it, I didn't. And that's the beauty of drawing on the charts. So I encourage you to do that. Because it really helps lead the eye. How about MCHP, Microchip Technology? Are we seeing a similar kind of thing here? You know, although this stock is up 8% year to date, it's been a little like she loves me not, like downtrending, uptrending, downtrending again, big down day to day, down almost 6%. But do we see a support level maybe around here? Now you might say, well, I'm going to do a swing trade to here, but you know, we've got all these tails coming up in this area, you know, and it's already had such a big move. We might say, yeah, I think I'm going to leave that one alone. Now, how about we look at Lulu? Just like saying Lulu. So Lulu, it's been on the struggle bus all year. Like it's down 55% year to date. And if you don't have that little thing on your chart, which you can easily install using a script, I have it in the post pinned to the top of my X feed. You could check this to say show price as percentage, and it will show you, you know, we're down 57%. You know, year to date. So, you know, which leads me to reiterate, you know, scripts aren't totally guaranteed as to accuracy. But, and this is a 9-month chart. So let's go to year to date. There we go. Yeah. So, but this has been downtrending. So this is a downtrending stock in spite of the fact that the market's been uptrending. This, you know, stock is marching to its own drummer. And is it close to a support level? No, the support level is down here around this 159 level. It's currently trading $10 above that. So could we do a swing trade on this? We could. And so what might we make our target? Well, we could make our target, the recent low was 159.25. We could make our target 160. So if we come to the trade tab and we come out to November, now we might want to do the first strike in the money or the first strike at the money. What's the problem with those strikes? What's the problem with these strikes? They're too expensive. They're not in our snack bracket because we don't want to risk more than maybe 550. So we're going to have to come out to this 160 strike. And what's the downside? Well, the downside is that the delta is minus 31, which means if the stock drops by $1, it's the value of this option will go up by about 31 cents. Now, is this a bad thing? Aren't you saying like, oh, sucks to be poor, sucks to have a smaller account? Well, this one isn't quite double the size, but a $1 move on this is 47 cents. So if I said, okay, if something went up by 47 cents and I had to pay 10.15 divided by 10.15, that's a 4.6% move. Where if something goes up by 31 cents on a 550 investment, that's 5.6. So you're not hurting as much as you think you might be. And so, there's still benefit to be had. So we're going to look at buying. Actually, we are going to buy custom with an OCO bracket. And so we're going to make this a market order. So we're buying a put because we're bearish, right? Right. And we're going to make that good till canceled, this good till canceled. Well, the swing trade, we say, hey, you know what? If this goes down by more than 50%, so let's call it $2.25. If it goes down by more than 50%, we want to call it a day. And our target will be to exit. This isn't coming up for me. Okay, I'm going to have to put this one in afterwards because here it is. The very corner. There it is. It's hiding on me. So when Lulu goes at or below 160, we would like to exit. So that'll trigger an exit. Oh, that says at or above. We want it to be at or below, less than or equal to 160. Now, if I hadn't caught that, what would have happened is as soon as the order was placed, it would have filled. So we're buying a put at 555. How much could we lose? $555. When Lulu, if and or when it gets down to 160, we would like to exit, or if this loses half its value. Okay, so my exit wasn't right. Let's edit that. It should have been 275. Yeah. Down 50%. My math skills aren't so hot today, are they? Okay, and so this is a long put. So if the market is bearish for a couple of days and Lulu continues to fall as it's been doing all year. Yeah, so John is asking, do you look at other things? And the answer is yes. You may want to come out and look at, one, you want to be aware of when earnings is. You may want to, look at what the analysts have to say. This one is maintaining a price target of 303. But Jefferies just adjusted the price target to 120 from 150. And both of those, 120 and 150, are below where our target is. And so, you want to look at all of those things sometimes, not just looking at the chart. Okay. So that was Lulu. Now, what about a bullish opportunity? Well, has anybody seen gold lately? Like, I mean, gold has just been like the talk of the town. Things just keep going up. And if you look at Newmont Mining, I guess we can get rid of this stock target and exit. We're out of that now. You can just get rid of this. But if we come to the Analyze tab and we look at this company, this is largely a gold mining company. It also explores for copper, silver, zinc, other metals. It's in many countries around the world, headquartered in Denver. And then, somebody was saying, do you look at other things? Well, if you wanted to see what the analysts think of this, and this is not uncommon. You have 5 that love it and 1 hater. And then you can come down and say, how are we doing on earnings per share? Well, last year it was up by over 200%, and sales per share up 13%. Return on equity up pretty dramatically, return on assets. And you might think like, these are such big swings. I wonder why. And you may want to go do some reading. But we're not looking here at a long-term love affair. I'm just trying to do a counterpoint type trade, like we did a bearish trade. This has earnings on the 23rd, so it's 2 weeks away. And if we do a short-term trade on this, could we do a swing trade? Just back up to this 89 level. And right now it's sitting at 86.01. And if we did that with a call, and this candle pattern, and this has been using the 10-day moving average as support. So when you have a bullish harami at a support level, that technically does not require confirmation. And so if we look at this and say, okay, we're going to do a swing trade by now buying a call, and our target on this, maybe we make it 89.25, really close to the previous high. And so it just has to come up and kiss it. Now, if we look at this Monday and it's had a big up day, and it's up at, we'll put this as our swing target. Swing target. Now, could you do this with stock? You could. We could buy $5,000 worth of stock and put in a target. And what's the advantage of using a stock? Well, the advantage of the stock is that if it takes a while to get there, we don't have to worry about time decay like we do with a call. But the idea with a swing trade is that you're going to be in it for a pretty short period of time. And so, one of the things, if you look at the example trading plan and that trade management mini session folder, it might say, well, is the market uptrending? Check. Is this stock uptrending? Check. Do we have, a bullish entry? Check. Does it trade more than 1 million shares a day? The stock? Check. Do we have lots of volume on the options? Check. Do we have a tight bid-ask spread? Like, is that bid-ask spread less than 10%? 15 cents on almost $5? Check. And earnings is the 23rd. So Tori, thanks for noticing that. But that's, almost 2 weeks away. Do we intend to be in this trade 2 weeks from now? No. With a swing target, our expectation is that it should swing back up and hit that target, within the next week or so. Like when you consider, it hit that 89, it hit 89 2 trading days ago. And 4 days ago it hit that 89.80, 89.37. Okay, so this is a short, the expectation is that this is a short-term trade. So we are again going to buy custom with an OCO bracket, and with our swing trade, we're going to make that 245. Hopefully I'm a little better on the math this time. Our exit, if it goes down by 50%, likely not going in the right direction. Okay, and then our target is going to be a market order based on, here we go, the price of the stock going above 89, was it 89.25? 89.35, 89, we'll make it 25. So when we get to our confirm and send, I wonder if that didn't hold. It didn't. Greater than 89.25. There we go. Confirm and send. So we want to buy a call on Newmont Mines because we're bullish, right? Right. We want to sell that. Oh, now it's come in twice. Oh, you know what? I put the first one in on the buy order. Well, that's not going to work. So we're just going to delete this one and start it again because I made a mistake. So we're going to buy with an OCO bracket. I put the first one on here instead of here. So this is 89.25. This is why reading your confirmation orders is so important. And I didn't make that mistake on purpose to show you, the importance of reading these things, but it just worked out that way. That whole being a human being thing can be annoying sometimes. All right. Okay, and then this, so 245, 240, good till canceled, good till canceled. Let's try it again. Oh, and then this has to be a market order. Okay, so we want to buy a call on Newmont Mines because we're bullish, right? Right. And then we want to sell if it goes above 89.25. Current price 85.83, so right. And then we want to sell if it goes below 240. And you might say, well, hey, if I have a stop here at 240, why am I not doing two contracts? Because I've got an exit in place and we can risk up to $500. What if it gap down? It is still possible that we could lose the whole thing. And so that's why, from a position sizing perspective, we're choosing to err on the side of caution. Okay? And this is a swing trade. Okay. Now, we did a 1 ATR trade on Intel. And we need to do a little trade management on that because with a 1 ATR trade, the deal is that you go in every day and you adjust the stop. And so if I look at this, INTC, our first stop when we placed this on Monday was at 35.47. And our target on this, well, we'll see when we go and adjust it. But at the end of each day, so we placed this trade on Monday, which was the 6th on this day. So my guess is that this was up when we placed the trade and then ended up down at the end of the day. So we placed our trade here. And at the end of each day, if it hasn't hit the target, we go in and we adjust the stop to 20 cents below the low of this day's candle. So had we gone in yesterday after the close, the low was 36.86. Okay, so we would adjust our stop to what? 36.66. You see, we just hover over this candle, 36.86. We take 20 cents off that. So we're going to come to our monitor tab. We're going to come to our activities and positions, and we're going to look at our working orders. Oh, I'm in the wrong account. Oh, did I just place that other trade in the wrong? Okay, you know what? I placed our Newmont Mines trade in the wrong account. So I'll go in and place that trade again afterwards. But we're going to look at our working orders. And so we're going to come down to INTC, and we did 2 of these. So I'll show you how to update one. So we're going to cancel and replace, and we're going to come to our sprocket, our disappearing, reappearing sprocket, and we're going to move our stop up from 35.47 to 36.66. And then we'll look at this again on Monday. Because with these short-term trades, we want to be out quickly if it doesn't go our way. And our target on that was, sorry, let me look at that again. $40.38. We can put that on our chart. And why do we bother putting things on the chart? Well, one of the reasons is that if you're managing these daily and we come in Monday and we see like, hey, it's trading at 40.26 and our target was 40.38, we're pretty close. And then especially if it looks like we've got a spinning top or a hanging man or something like that, we might just decide to take the money and run. And when it's on the chart, it's just easier to see. And so we've done some trade management, we've done some trade review, and we've looked at several stocks where we decided, okay, we've looked at this opportunity and decided to pass on it. And then we did both a bullish trade on Newmont Mines, where we did a swing trade by buying a call, and then we did a bearish trade on Lulu. And so I'll make sure those are in the right account so that we can look at those on Monday. So guys, thank you so much for being with me today. Appreciate you as always. Appreciate having James Boyd in the chat. If you have not subscribed to the channel, I encourage you to do that. If you haven't hit the like button yet, hitting like helps move this up in the algorithms on YouTube so that more people can find this. And then, what was it? Like, subscribe. Oh, and then follow James and I in the Land of X, Barb Armstrong CS, James Boyd CS. And there is a question about Canadian Thanksgiving. Is the food the same? It is. We do turkey and the mashed potatoes and gravy and stuffing, which is always my favorite part. Now, we tended to do turnips rather than sweet potatoes. So I imagine that's what we'll be having. And of course, pumpkin pie, although I can say I don't think I've ever met a pie I didn't like, but pumpkin has always been one of my favorites. So I'm hoping we have one of those as well. So guys, that's a wrap. Have a really great rest of your day. Lots of great content still to come today, and have an awesome weekend. Get out there and hug someone you love. And we'll see you soon. We'll see you Monday. And, I'll be broadcasting from the motherland. Yeah. So take care, guys. Bye for now.